speaking of AMD, you when you said that AMD was gonna go to 98 and it's
Yeah.
hovering around 99 right now. You also said that Bitcoin was going to go to 72. It's hovering. It's looks like it's headed in that direction for all possible indicator. Um, and a variety of other things as far as like that's how you've kind of, you know, made a real name for yourself is you've been able to
Thank you.
predict prices, right? Like that's kind of like your thing. Like you predict
Yep.
prices or something. And we know that that's the most important aspect of buying. I mean, of course, dollar cost averaging for sure. But if you're trying to like get in, it's important to get in low, right? That's
Yep.
at its core, buy low, sell high. That's like the most important thing in investing. But it's difficult to know when to actually know when something is a good time to buy or not. So just like the AMD situation, right? Can you just kind of walk me through like how did you know AMD would go to $98?
A couple of factors. So when I'm looking at a company, I'm looking at one, are they the leader in the space for AMD? No. Are we at the top of the market? So we were getting to the top of the market there. But then the EMAs that I talk about. An important lesson I want you guys to know that any EMA that is out of the box factory is not a great setting for great returns. So 72-day moving average, 420 EMA is good for very deep buys. 22 period moving average if you want a faster EMA helps a hell of a lot. And then I've talked about it before, but Fibonacci retracements, which is a mathematical calculation for the core levels that we are going to get to. So for all my traders, use trading as a way to get better entry on your long-term investments. And for my long-term investors, use your long lens in the market to be able to know where a market can go. So if we look before historically, when AMD got to a high of 119.82, from there it fell. This was in what year is this? 2021. It fell to $65. So before the 2022 crash, AMD, because it's not the strongest company in that sector, fell apart. It's a good tip. Like the fifth best company is usually going to be like the canary in a coal mine to tell you where the market is going to go. So once we broke above there and we got to 179, it was the same double top of before. I think it got to 181 after that a couple months later, and then it fell apart. Like when I say don't buy at the highs, whenever a company that is okay, when it starts to get at a high, I start to get fearful and see how much will they pull back. So I'll set an alert, 10% from the high, then 15%. When they started to bleed from those highs, I'm like, they're going to crash. Because if we're at the top of the market, Bitcoin is at the top of the market, will the fifth or sixth best company in that sector do better or worse? They're going to do worse. And also, as NVIDIA began to come down, it was inevitable that AMD was going to come down as well. So combination of technical analysis, fundamentals, and just being in the market so long, like things have a rhythm. Like take Aaron Rodgers. I don't care what team Aaron Rodgers goes to. He may play well for 3 or 4 games, but historically, at some point, Aaron Rodgers is going to have a bad attitude. He's going to pop an ACL, MCL, something, right? He's not going to perform at the same level that a Tom Brady would. NVIDIA's Tom Brady. AMD, Aaron Rodgers. Good, have potential. Garbage right now, should retire. So a combination of technical and fundamental. Shout out to Aaron Rodgers, too.
Shout out to Aaron Rodgers. And
Damn,
that,
no way to treat a 4-time MVP,
but
man.
that was, I appreciate that was great insight. And because like it's one of these things where everybody says buy the dip, which that's a very vague statement to make because
sure.
a dip can be 10%, a dip can be 60%. You could keep buying a dip all the way down to 90%.
For sure. Yep.
If you want some of these meme coin, you could buy the dip down to where there's no money left. It's actually
no recovery.
delisted. So buy the dip, yes, but that's kind of a vague statement. Where do you buy? And like I said, that's something that is vitally important as far as knowing where to buy. Not for everybody. Like I said, if you're just a casual investor and you just want to put money into the market every month, that's fine. 100% fine. But if you start to play with some real money and you really trying to figure this thing out and you got 50, 100, and you really trying to, okay, like, you know, you trying to really hit a double or a triple, possibly a home run,
Yeah.
that 10, 15, 20% makes hundreds of thousands of dollars of difference long term as far as where you buy, right? And that's one of the things that you've cultivated with Stock Club is like, to me, the core element of Stock Club is that you get prices on when to actually buy. Like if it hits this price, right? It's three prices, right? It's like, what's the price? It's the low the boat price. What's the prices?
The swing trade price and then a quick entry. So my traders, you get a quick entry price, swing traders in between, and then load the boat. Is like where you should put a large majority of your capital if you're looking to buy.
And then, so it's like a lot of stocks, like you get like 50 stocks, right? And then it's like, okay, so some of those stocks might not hit the low doubles price.
Yeah.
But if 7 of them hit, now that's on your
Money
buy
time.
radar. So it's pretty much taking the work away from you.